identify where the market's going to draw to. If you can determine where the market is most likely, not all the time, most likely where it's going to reach for, that's the largest portion of the battle. Like that's the thing. That's the thing that makes.
So these are the results after the FOMC, and I was looking for a market reversal because there was a internal liquidity pool on top of the market, right? There was a fair value gap that I expected the market to go to just right before the end of the day, and today is Friday, and these are the entries that I'm marking on the charts. That's the first fair value gap that was formed right after the FOMC, the first bullish fair value gap on the 5-minute time frame, and there's the second entry. If you can see it, you can enter there and go with the market up. What I like about these indices is that even if you enter, if you're right on the trade won't spend a lot of time consolidating on your price depending on the time that you're trading. I like trading during the New York time because that's the one that ICT tells us to trade during, right? So as ICT said on his mentorship, you can trade right after the news, right? There's no problem with trading right after the news. So right there, market was breaking structure. As you see me placing that trend line on the chart right there, I might need to straighten it out for you to see. Market started breaking structure on the 5-minute time frame and created a high on 14658.60. Those highs right there, right? And then it went down into our first fair value gap, and what happened? Boom, it rallied up again, and that's just fucking random, right? That's just random. And then what happened again? The price failed to break that high and then came down to the fair value gap, touched it on top, and boom, it went up. Random again, right? I had a bias already for today. I was bullish on this market, but unfortunately, if I had took an early entry, I was going to be stopped out. So I didn't take any entry because today's FOMC and I couldn't trade. There were news. I don't know what the news were, but I knew that there were news that were going on, right? So I knew that I was bullish. I wanted to see the market go to the fair value gap that I am going to show you in the future of this video, right? Just bear with me as I am doing this. And right after the news, you see the price just started rallying up, and it went all the way up just to the fair value gap that I want to show you. Let me show you in the I'm going to show you in the daily time frame, right? As you can see, the market just went boom up there into the daily fair value gap that I had noticed. I wish I had recorded a video for that, but I was watching ICT. ICT said we are going to be bearish, and he's looking at a fair value gap that is under the. So I thought, oh, the mentor is right, so I cannot oppose the mentor. But I had an idea that this market is bullish because the market won't just go straight down, right? It needs to retrace a little bit and take a little bit of liquidity on top of those highs, and then it maybe will come down. I'm not sure for where it's going to come down, but I know for today we are going to. I knew that we were going to that fair value gap, and these are the entries that I would have taken if I was aiming for that fair value gap. I know holding the trade was going to be hard, but now that I am seeing this behind the screen, I'm going to be confident enough to hold the trade. So now I am going to trading view to show you that I had marked the fair value gap a long time ago during the early morning session when I was watching ICT's mentorship, live mentorship, right? I marked that fair value gap on top so that I know where the market is going, because the first thing that ICT tells you is that you must know where the market is going or you are gambling. And us as ICT students were taught that where the market is going where there is liquidity, right? Whether it's filling a fair value gap or the market is taking out a relative equal highs, or is taking out just one high or one low, right? That's what we are taught, and that's what price does all day long during the New York session. If you're an IC trader, trade during the New York session, and make sure that you trade when there are no news, because the market, ICT himself said it, that the market can be a little bit manipulated when they are news. There is human intervention during those times, so make sure when you're setting your setups, you set them during days when they are no news, right? No news. Don't gamble. Don't gamble. You will lose all your capital. Right, guys. So we're at trading view right now, and this is US Tech 100, which is the Nasdaq 100. I'm using this one. Okay, so I want to show you something. Let me zoom into the chart and show you what I had marked on the daily time frame. See that? Boom. And you see that fair value gap right there? That's what I was looking for. But as you can see, price came down to 14. What's that price? 145.12, right? It came down to 145.12 and then went up, and I marked it today's opening candle right there. As you can see, I had marked it, and it took down the liquidity right under the yesterday's high, yesterday's low, and then boom, went to the fair value gap, right? And that was a lot of manipulation, because I'm sure a lot of traders were sure that this market was going down and not going up. And so I think the price is going to close on that gap for this week, and then next week we're going to continue. I don't know where we're going to continue, but we're going to continue where we're going to continue, right? So this is my log. I'm logging this for today. That's what I was expecting price to do yesterday on Friday, on the 6th of October 2023.
Identify where the market's going to draw to. If you can determine where the market is most likely, not all the time, most likely where it's going to reach for, that's the largest portion of the battle. Like that's the thing. That's the thing that